We're not in a recession right now, says my man Brian Westbury over at First Trust Advisors. And we're gonna read. I love Brian Westbury. He's got a book on there, and I got on the counter over there. I just this is he argues that we're using the semantics to argue that we're in a recession, and yet he uses semantics himself. It's just weird to me. So let's check this out. We're going to go into the article that he had written, why I said I think we are in one. All right, so, and look, I'm a huge fan of Brian Westbury. At the end of the day, it doesn't matter if the NBER, National Bureau of Economic Research, says we're in a recession or not. No, because it is truly semantics. What matters is your ability to pay your... Just made a big old mess. Oh boy, hold on a second. Dare I drop my book on Charles Proteus Steinmetz on the Electrical Wizard of Schenectady, which you should read. By the way, Proteus, whatever is, that's the name, middle name he chose for himself, just as an FYI. All right, so anyway, let's read what Brian says here. There we go. Real GDP declined at 1.5% annual rate in the first quarter, and the Atlantis Fed now expects zero growth in Q2. All right, which so basically, models at face value, it superficially appears that the odds of having two consecutive negative quarters are close to 50% because we had negative quarter in Q1, and Atlanta says we're going to have 0% growth, which if you're a betting man, you flip a coin, 50% we could have positive, 50% we could have negative. If we have negative, that is an official recession. That's what the federal government or economists all agree. Two consecutive quarters of declining GDP. All right, but my man Brian says we believe a recession is coming. Well, the recessions are always around the corner. That's just a fact. But we're clearly not in one yet. In the first 5 months of the year, manufacturing production is up at 6.6% annual rate. Payrolls are averaging a monthly pace of almost 500,000, and the unemployment rate has dropped to 3.6. Meanwhile, in April, both real consumer spending and real personal income were at record highs. If this is a recession, we could use more. I just, let's keep going here. Okay. It's important to recognize that real GDP, or he says GDI, gross domestic income, an alternative measure of economic output, rose 2.1% in the first quarter. Okay. So this kind of begins to remind me of Robert Schiller's Cape X. What does he say? He called it the Cape, then he had a different Cape to account for interest rates. It's like we're starting to create stuff to show that things are better than they were, or worse than that. I don't care what it is. And we can show anything. But it's just like, I mean, we've all kind of solidified on the GDP, two consecutive quarters of negativity of not growth, of actually negative growth. Leads to recession. So we can create all kinds of different things to show, oh no, it's almost like the 3-factor French family stuff, then it's 5-factor, then it's 7-factor to figure out investment strategies. I don't like this, man. It's reaching, if you ask me. The public pays very little attention to GDI because the government usually takes an additional month to report it after GDP is released. Okay. Well, I mean, I don't think I've ever heard, I've heard of GDI, but not very prominent. It's not, it's a big deal, but why are we throwing, I don't know, it's weird to me. We're not saying everything is fine. Obviously, inflation has hurt a lot of people, but the debate about whether we're in a recession should be about real economic pain, not academic style semantics. Okay, the real reason the arbiter of recession is the NBER weighs jobs factors, or BLS is what does recession. NBR, the National Bureau of Economic Research, weighs jobs, manufacturing, real incomes when assessing whether we're recession, not just real GDP. Man, I get all this, but it's like kind of after the fact, man. You know what I'm saying? It's like, oh no. If you saw the Colorado Avalanche game last night against Tampa Bay was griping because they say there's too many men on the ice, and you're 100%. But they weren't really griping that much. But it's like after the fact. We're talking. This is the way the game is played. I don't know. It just seems a little bit odd to me. Let's keep reading though, real quick. We suspect some of this debate is political, with some chomp at the bit to claim there's a recession because it could hurt the incoming party. Well, again, okay. We expect a recession with a lag after monetary policy gets tight. See, the reason he's saying that is because they literally believe the Federal Reserve controls things. The Federal Reserve has this little knob. It's kind of like the climate change. See, it turns CO2 to the left, and the climate, it goes down, the temperatures drop. Turn CO2 to the right, and the climate gets too warm. Turn the interest rates to the right, and the economy stops. Turn to the left, and the economy boosts. It's the modern era of the Phillips curve in economics. It's actually, I'm not gonna say it's embarrassing because I like Brian, but it's just like, man, they just put so much power in the Fed. It's weird to me actually, but okay. Let's see, bank capital is well above regulatory requirements. We don't have a mark-to-market accounting that will generate a fire sale in bank assets. Right here, Brian, this bank capital is well above regulatory requirements. Even more likely is the notion that the U.S. is on a cutting-edge recession like 2008 and 9. Oh, that's why inflation's not going to happen, because the bank has so much money just sitting there on the side, not into the markets. Oh, that's exactly why we are not going to be able to beat inflation with a Fed. Because I don't get it. It's like this. It's the weirdest thing. When it comes, a recession will cause economic pain for many. All right, I just want to show something to you real quick. So here we got real GDP declined at 1.4% annual rate in Q1. And look, I'm not bashing Brian. I don't understand. So let me show you what this is. Dateline. What is this? I guess it must have been the beginning of May. I'm not sure what the date is on this. Anyway, let me show you what's going on here. So why did real GDP drop in Q1? A host of factors that are probably temporary. First, a massive surge in imports, which resulted in a drag of 3.2 percentage points on growth. Second, inventories rose at a slower pace than in the last quarter of 2021. Has any of those changed? I mean, I don't know. I can't imagine imports are not massively surging. Why? Because a dollar has gone up in value relative to other currencies, other than Russia, of course. Russia is the best performing currency in the world right now. It's crazy. Third, government purchases decline. I mean, okay, I don't know about that, but are we seeing inventories rising at a quicker pace than they did in Q2 or Q1? Are we seeing a massive surge in imports in Q1 falling in Q2? I don't think so. The US dollar versus the euro. Here we are in January. Let's see, January 1st, right there, right there. 88 cents. Now it's at 94 cents. So the dollar has risen, was it 8% or so over the last year? And even at the end of let's see, at the end of March, it was at 90. So the dollar is up 4 cents against the euro. I mean, that's a 5% increase, which means, again, it's cheaper. Foreign products are actually cheaper for us, so we import more foreign products. So let's see the dollar against, I don't know, let's do the yen for simplicity here. Japan, A B C D E F G H I J right there. Look at that. I mean, here's the dollar versus the yen as of. The dollar buys 135 yen now. Back then, it was only buying 115. So the dollar's up 15% against the yen. And at the end of March, it bought basically 125 or 22, and now it's 137. I mean, come on. China, was it the yuan or whatever they call it? The won. All right, let's go to China. China won. Let's see what we got here. Oh, yeah. I mean, geez, man, the dollar spiked against the yuan. I mean, I don't know, man. I don't know how you can say that if the surge in imports made the GDP negative. I mean, what's the price of these dollars versus the U.S.? The U.S. is surging against these dollars, which means imports are cheaper for us, which means we're going to buy more imports. So let's take a look at the ruble. Well, let's look at the India rupee, shall we? India rupee. There we go. We're surging against the rupee. I mean, the dollar. I mean, not huge relative to other things, but still, it's up about 5 to 6%. Let's look at Canadian. What do they call it? The loonie. Is that what they call it? The Canadian dollar. Yeah, we're up against Canada. And then lastly, let's look at the ruble. I think we're getting smoked by them. Let's see. Russia, China. How did Trump say Russia? All right, Russia, the ruble. Oh, yeah, look at that. Damn. Look at that. Now, Russia's not digging that. Look at that. You know why? Because, again, that means their export's more expensive. So basically, Russia's exports are more expensive, at least against us, but our exports are more expensive. Thus, imports are less expensive. So we'll be buying more imports, which is if Brian is right, as he said right here. Why did the real GDP drop? A host of other factors are probably temporary. Massive surge in imports. All right, inventories rose at a slower pace in the last quarter of 2021. I don't think inventories are rising at a higher pace. Why? And I'm just going off what Brian said. I mean, if this isn't true relative to why we're down, then okay, so be it. I'm wrong, but then Brian would have to be wrong too. I don't get it. But if he's right, and I absolutely think he is, then the inventories rise faster? I don't think so because they can't offload the stuff that they have already. Anyway, so they built up too much inventories in 2021. They didn't buy as much in 2022, and they certainly didn't buy as much in 22 second quarter. So, semantics, I get it, but recession's here, man. And I mean, you don't do anything differently just because someone says a recession. The BLS says recession as opposed to NBER. But let's not discount the fact that we're here. I don't want to say fact, but the most likelihood. So, all right. Love your thoughts. We'll see you.